United States. Current situation. In the United States, the markets have experienced a mix of optimism and caution. For example, the Dow Jones Industrial Average reached a new record high, while the S&P 500, particularly the technology sector, shows some pullback due to valuation concerns. Over the past decade, the S&P 500 has achieved an average annual return of around 17%, outperforming most other developed markets. Key risks: 1. High valuations of major stocks, especially tech, make them more sensitive to economic or political shocks. 2. Heavy reliance on the performance of large companies means that shifts in this segment can affect the overall market. In fact, Morgan Stanley analysis points to the concentration of the U.S. market in a limited number of companies.
Canada situation and fundamentals. According to analyses, Canadian markets, such as the S&P/TSX Composite Index, offer lower returns compared to the U.S., but show more stability in sectors like banking and energy. Important point: when investing in non-U.S. stocks, currency effects should be considered. For instance, a relatively stronger U.S. dollar, USD, has reduced the effective returns of foreign stocks when converted. What you should know: advantage: returns may be lower, but risk is relatively lower for investors seeking diversification. Challenge: a stronger USD effectively reduces the value of returns recorded in other currencies. Coverage opportunity: stories like, is the Canadian market a good diversification option, or how does the strength of the USD affect international investors?
Switzerland, situation and data. The Swiss market shows somewhat high valuations. For example, the P/E ratio of Swiss stocks is around 22.04 as of October 24, 2025, higher than the 5-year historical average of 19.28. Performance: Swiss indices, for example. CH20 experienced a slight short-term decline minus 2.8% over a month but remain up plus 4.2% over the past year.
Magnifying glass tilted left summary and monitoring strategy. Key points: the U.S. leads today in market size and historical returns, but carries higher valuation risk. Canada and Switzerland provide diversification opportunities, though returns tend to be lower, and currency conversion plays a significant role. The Swiss market is particularly a growth challenge, with high expectations versus actual growth realization. Global variables, including interest rates, US dollar to Swiss franc per CAD values, and trade policies, significantly influence these markets.